Hello, internet friends. My name is Daniel Foch. I am a real estate broker practicing in the Greater Toronto Area, and on a semi-monthly basis, I'm going to be trying to do some national and Greater Toronto Area housing market statistics using a platform called the Habitat. You might have seen some other YouTubers doing this in the real estate space, but really wanted to go coast to coast and really get an understanding for what's happening, especially in a rising rate environment, of what's happening to different municipalities and where we can identify opportunities for potential real estate investments, especially in Canada. You might know me from Twitter. This is a picture of my Twitter. I go by Daniel_Foch. That's my name. And I mostly post charts there and analysis, and I host a regular Twitter space on Thursdays at 8 p.m. Eastern Standard Time, where we just talk about the real estate market to about 1,500 live viewers. You also might know me from TikTok. I just started it a couple of months ago, and I basically just argue with young people about whether or not the housing market is doomed, and I post charts and talk about what's happening and how macro, especially, and the economy is impacting the housing market in Canada. I also host a podcast called the Canadian Real Estate Investor Podcast, and we are the #1 real estate podcast in the country, and we talk about real estate investing primarily. So without further ado, today I'm here to talk to you about the CREA, Canadian Real Estate Association statistics. They release these CREA Stats, it's called. You can just go stats.crea.ca. And basically they post on a monthly basis on the 15th of each month, which is today, Thursday, September 15th, a handful of charts. And you can only see these charts if you're on desktop. I've tried on mobile. I can't find the ones on the left-hand side here. On mobile, you're typically only going to see these this monthly home sales chart in the middle here, and then you're also going to see this aggregate composite HPI chart, both of which are going down actually. So here you can see, if I pull this up, the aggregate composite MLS HPI, which is a house price index, has now gone down for 1, 2, 3, 4, 5, 6, 7 consecutive months. And basically, this means that we're seeing house prices in decline across the country. Some other interesting statistics that I came across, that these are the charts that CREA posts. So this is your monthly home sales volume. Obviously, July and August are typically slow months. You've heard a lot of agents arguing that, we're seeing very slow volume because it's typically seasonal in the summer, that it's slow, and I would agree with that in the summer. But I think that we are going to stay at a record, not record low volume, but I think we're going to stay at a low volume, sustained after what's happening to this counter-cyclical event in the Canadian real estate market. So if you look here, you can see this black line is the trend line, 10-year monthly moving average. And for the entire period during COVID, save for that big dip there, which is when COVID happened and there was lockdowns, that was volume obviously hit record lows that they never recovered from. But if you even look past or back to 2008, 2009, it's an indication from my perspective that volume really drops off when Canadians don't know what to do, right? And I think that this past period of time here, where it's following this trend line, there's relatively consistent, predictable economic times. But in 2008, 2009, during the global financial crisis, prices dropped off a lot, as well as they didn't drop off as much as they did in the States, but prices dropped off a bit, and we were in a recession. Canada wasn't hit nearly as bad as the States, but people stopped transacting houses, and we're starting to see the same thing happening here. And you saw it happen again in COVID. Obviously, a lot of that was because of the lockdown at the beginning of the global pandemic, but also because Canadians, in a lot of cases, adopt a wait and see mentality towards the real estate market, and that is what's happening now. And you're starting to see that also show up in listing volume. So if you look at residential new listings, another chart here that's posted by Canadian Real Estate Association, or CREA, on their CREA Stats site on a monthly basis, you can see that new listings have declined for the third month in a row. So since, they've declined since Q2, July and August, both being pretty low, other than 2020 Q2 here being that COVID period. Again, people weren't listing properties when they don't know what's going on in the market. Residential sales activity, last 2 months have been, other than that 2020 Q2 period, and this is seasonally adjusted, so this would be as if July and August were a full quarter. So it's trying to compare them side by side. July and August were lower than basically any other month except for, any other period except for 2019 Q1, which, you know, beginnings and ends of years. So like December and January are often slower, just Christmas, cyclicality, etc. So again, volume we could end up in one of those situations where you have low supply and prices actually they can't really decline at a rate that what we were seeing earlier this year, because there's just not enough volume changing hands to really set those price trends, and that we might actually stay in a state of excess demand. I don't necessarily know whether or not that's true, but I will say that I think that the worst of the price declines are behind us. Like, I don't think we're going to see another 20+% declines that we saw from Q1 of 2022. I think that we'll likely trade sideways probably for a little bit, and that's what happened. 2017 prices came down in the Greater Toronto area, and nationally they came down, and then they basically traded sideways. And I'll show you this actually on this chart here. So this price chart here, if you look at 2017, there was a bit of a bump up here in the average price, the red line. And you can see it in the HPI, the house price index as well, where basically prices peaked and then they dropped, especially in the GTA. Vancouver, kind of similar thing happening in 2016. They sort of front ran what that correction, let's call it, in the GTA, or compared to the GTA. And then the market just basically traded sideways until 2020. What happened? Well, monetary policy basically dropped interest rates to 0%, or functionally almost 0%, and the market went on a tear thereafter. So from 2020 until 2020 till present day, and now you're starting to see prices roll over again, and in a much more meaningful way by comparison to what we saw in 2017. I've gone through this in the past with looking at the Economist house price index to just show you what that looks like in past housing cycle corrections. But if you want me to revisit that on a more national level, I can. But basically, prices come down pretty steeply in a 1 year, over a 1 year period, and then they trade sideways until sentiment has a chance to recover. And sideways can be down a little bit, down 1, 2, 3% per year, or it can be up maybe 1% and then down 1%. But it's not, there's no meaningful, you're not going to see these major bull runs like you saw before. And in the 90s, it took I guess prices peaked in 1989. They dropped until 1994, and 1996 actually in Toronto, and then it took them until 2002 to recover on a nominal basis, and 2012 to recover on an inflation adjusted or real basis. Last one I'm going to visit here on the CREA site is residential sales activity. You can see that again, we did see record low sales for July and August. I don't think, there's one other one here, the residential average price. This one's funny because I posted this on TikTok and on Twitter, and people are like, so basically Canadian prices went down about 4.6%. Ontario prices went down about 1%. And no other province posted, this is year over year. So August 2021 to August 2022, and Ontario was down year over year about 1%. Canada was down about 4.6%. People are like, how is it possible to be 4.6% if no other number in that data set is greater than 4.6%? But it's because it's not this number isn't an average of the averages. This isn't, Canadian average isn't an average of all of the provinces put together. It's an average of all of the transactions in the entire country. And of those transactions, about 167,000, I think, in 2021 were on the Toronto Real Estate Board, by comparison to 660 something thousand in nationally. So you have almost 20% of transactions taking place just in the Greater Golden Horseshoe, and then I think something like almost 30% of transactions taking place in Ontario, and something like almost 36% of people in Canada, I think, live in Ontario. So just and when we look at what happened, if you go to my most recent video about the Greater Toronto area, the volume drop that we saw in the GTA shows that they would have previously been taking a larger share, so they would have really had a more positive skew on that in the past. And then when volume dropped to about 50% of what it was in February, it's going to have an inverse effect. It'll skew. So this to me just really indicates how inaccurate average is as a data point. And I just think that's, this is why I like to use median, and I wish that CREA used the median price as the stuff that they release in their data set. The only other piece here that I would kind of mention is that apartments seem to be faring better than any other asset type, probably because they're on the price floor, but also we are seeing a bit of a reurbanization of demand, which I mentioned. So, single family and detached homes with the backyard premium that you're hearing about from COVID are being impacted more negatively by comparison to other smaller homes. So the cheaper the house, the less it's suffering as a result of what's happening in the market right now. I'm going to go over to the Habistat now. So to get to this page, you can use this as public, habistat.com/analyze-benchmark-home-prices, or just click on the analytics on their page, and then you can go click on benchmark home prices. You can see here, you can see the Canadian average price, and you can also see the mean trend line. And basically it looks like we are gradually getting back to that mean trend. HPI, I will admit, does lag a little bit. And you can see that, if you look at markets like Greater Toronto as an example here, where, this would actually probably be almost right on the trend line already. And they have, and I can even look at if we saw which locations saw prices change the most here on the right-hand side. If you just click on some of these pre-built analysis, if you look, we've got only three provinces here, only three markets that are tracked by CREA. So Bancroft, St. John's, and Newfoundland are the only markets that didn't go down in price. Some went down very little. Saskatoon down just shy of 0%. PEI and Brantford all down less than 1%. But then if you go to the bottom here, you're starting to see like Chilliwack, Sudbury, St. John, New Brunswick, Sault Ste. Marie, Fraser Valley, North Bay, Guelph and District, Berrien District, Woodstock, Ingersoll, Rideau, St. Lawrence, and Niagara, Halifax, Dartmouth, London, St. Thomas, all down more than 4% month over month in August. So these are pretty big declines. I guess just to return to the HPI piece that I was talking about there, I did have a market that I wanted to mention that on. So Windsor Essex, actually, if you look at how much prices changed since, and then you go to the beginning of the year, let's just say January, I'll just do a year-to-date kind of thing right now. You'll notice that Windsor Essex is actually up 17%, I think, since the beginning of the year. But a lot of agents from Windsor who I've been in touch with are mentioning to me that the market's actually down already based on year-to-date and from peak. But because of the way it's tracked through the house price index, rather than which is using kind of trying to come up with like a composite house and then create an evaluation based on that, it isn't necessarily properly reflective of what's happening in the market. Markets that the top market year to date is Fredericton. But again, I still think we are beginning to see. So if we look at which places saw prices change the most, Fredericton is now one of those areas where it's down 3% month over month. So we're starting to see that the impact of sentiment changing. It was the credit dependent markets that were impacted first. As soon as rate hikes happened, the buying power was being destroyed in real time. And in markets where, in markets like the GTA, Greater Toronto Area, Greater Vancouver area, markets that were higher priced, where people use a lot of credit to buy houses, those markets were going to sell off first. Now you're starting to see it, prices start to come down across the board in Canada more because sentiment is starting to erode nationally. Some of these markets I actually don't think and some of these could just be because of cyclicality, though price isn't super cyclical, but some of these markets like Regina, Calgary, think most of Newfoundland, St. John's, and Newfoundland and Labrador, Saskatoon. I mean, a lot of these just trade basically based on industry available there, job markets, commodity prices, oil prices, etc. And I don't know if they're necessarily going to be experiencing a major counter-cyclical event like we've seen in some other places. Not to say that things aren't going to suck in a lot of places across the country. I think that, economically, there's going to be some pain, but I think most of that pain will be isolated to the areas that were more levered up. And you're seeing a lot of speculation, people going and buying second homes. They're borrowing against their existing homes to go and buy investment properties, or not even investment properties, but properties just to speculate on, and buying money losing investments, cash flow negative properties. These are things that are not uncommon in the Greater Toronto Area, right? And that was spreading, that was kind of infectious to Ontario, but also into a lot of markets that really ran up as a result of people. So there was this urban exodus in Toronto where people left the Greater Toronto Area to go to the suburbs, but then there was also this Ontario exodus. And if you look at most other provinces now that used to have, even Quebec, which Quebec used to export more people, so more people would migrate from Quebec into Ontario, that actually changed for the first time ever in 2021 and the beginning of this year. And it's remarkable if you really think about it. So you're getting this Ontario exodus. People are getting so fed up with the prices and whatever. It could be politics. There could be a handful of different qualitative reasons as well. But let's just assume that it's economics. So the house prices make it nearly impossible for them to economize in Ontario. And so they were going to other places. And the places that they landed are now the ones that are unwinding next, right? So you're seeing Halifax being a very popular one. Greater Moncton as well being a very popular market where a lot of Ontarians were landing. And the reasons being, they wanted to go and either start, do their new household formation in a city that felt more compelling, more affordable for them. They were still close to the job market. It was still possible for them to work from home and have that walkability and intimacy, but get the detached house with a backyard in a city or whatever it was. There's a handful of reasons, a big scope of reasons, and as to why somebody would decide to leave Ontario. But the people who left Ontario, they took that Ontarioism with them in a lot of cases, which was, lever up and bro down, buy some houses that you can't afford and use credit to do that. And so that contagion, that sentimental contagion that happened from Ontario buyers was ported over to some of these other markets across the country. And now we're starting to see them be impacted more. Markets that didn't see that happen from my perspective would be places like Saskatoon, would be provinces like Saskatchewan, where people weren't necessarily flocking there. Calgary saw it a lot, I think. I think Halifax saw it a lot. I think New Brunswick saw it a lot in both cities. Newfoundland, not so much, although you were seeing a lot of boomers beginning to go and do their snowbird retirement in Newfoundland. And PEI actually, I think, is one of the only places that's relatively unchanged month over month. And if you go back to that CREA Stats, year over year change, like they were kind of one of the lagging markets, let's say. But PEI August to August from 2021 to 2022 was growth of 15%. So I'm very interested to see what happens. I'll continue tracking these things, and I hope this was of value to you for those of you who are interested in what's happening in Canadian real estate market. If you have any specific questions, I would love to hear them. Put them in the comments below. Give me a like, comment, subscribe, whatever the shit that I'm supposed to say to do the YouTubing thing. But I just want to have conversations about what is of value to listeners and how I can shed some light on what's happening in the Canadian real estate market as a result of, or the Canadian housing market as a result of, monetary policy, global recession, interest rate increases, et cetera, et cetera, et cetera. So please let me know. I'd be really happy to hear from you. Thanks.